Hey everyone, welcome back to another Stock Market Open live stream. I'll have a full update on a little baby situation. Boy, I was there for a long time yesterday, 18 hours or so. Full update on them soon, so stay tuned. But for now, we gotta get a little bit of work in, and let's go take a look at what's going on in the market of the stocks. So yesterday was quite interesting. Specifically, I also wanted to mention we are transitioning eHack to sort of a new little engine that we're running in the back, which will make it easier and faster for us to post, as well as allow some sorting and searching and some of the features y'all have been asking for. So stay tuned on that. I think that'll be really cool. We'll have more on tomorrow. Maybe today. So stay tuned on that. Anyway, okay. So let's take a look at what we've got here. So yesterday was interesting because you had Palantir up 30% after earnings. The biggest thing on Palantir that I found is you finally were showing this real commercial revenue growth, where not only did you have 30% commercial revenue growth in the prior year, but you had a very optimistic CEO who painted a very clear path that, hey, look, we are looking to grow commercial revenues, say 40% going forward in, thanks to AI, and we're seeing real growth here. That sort of vision and guidance from a CEO is really rewarded. That stands heavily in contrast to some of the more muddy confusion that you get from, as an example, Tesla. And this isn't for retail, right? Like, I'm exposed to Palantir. I think it's one of the best software AI plays, but also to Tesla. But the difference in communication is really stark, and I think those things are very, very important, because on one hand, you have guidance, and on the other, and excitement and enthusiasm. On the other hand, you have enthusiasm, but no real clear guidance or path coming out of Tesla. And so that's not to bag on Tesla. It's not to say that high interest rates aren't weighing on Tesla. It's just simply to say that analysts kind of on Wall Street, they need someone to do their job for them to some extent. That's not to diss on analysts. It's just to kind of say, like, hey, no analyst wants to really go out there and be like, oh yeah, I'm totally gonna guess some numbers here. It'd be nice to get a little insight from the actual insiders in the company on what some guidance might be, even if the numbers are bad. You know, it's one thing to say, hey, look, deliveries are going to be flat this year for Tesla, for example, but next year we actually think we're going to grow by, 60% if interest rates come down 1.5%. Yeah, like some kind of model like that at least provides some enthusiasm to where you can average growth over a couple years and basically butter out the pain that you might go through in the near term. I think that sort of guidance is quite important, and to just sort of say F you to the analyst makes it very difficult for analysts to sell a stock to their clients. Remember, much of the stock market is a game of sales. The SEC once told me securities are not bought, they are sold. Think about that. Let that one sink in. Oh boy, that was like 8 years ago I was on the phone with them. I thought that was really interesting. Anyway, so we are at 5:30, so we're gonna get trade balance here. We're looking for negative 62 billion. That's all we're really looking for right now. We're gonna get about, there it is, 62.2, negative 62.2. So I mean, not really a big number. We're going to get consumer credit later today. We're looking for a $16 billion growth in consumer credit. However, that won't come out until about 12 p.m., so stay tuned for that. And then tomorrow we'll get initial jobless claims, continuing claims, wholesale inventories. Friday will be interesting because we'll get the CPI revisions. And then next week we'll get CPI, which is obviously what everybody's really focused on. CPI, month over month expected to come in at 0.2, core month over month 0.3, year over year 2.9, and year over year core 3.7. So stay tuned for CPI. That's on the 13th. I did read a very interesting piece from Nomura Research yesterday. Nomura Research was very interested in this idea that you could have lower inflation over the next, how should you say, 6 months or so. But they're really concerned that you're going to have this uptick in inflation in the second half or into 2025. I think that's very similar to what you're hearing from Jerome Powell, who says, oh, what if inflation settles higher, basically. I have to say, I don't really see that. I know we had that ISM report that was really bad last week, and it kind of led interest rate sensitive stocks to really sell off. Something you have to keep in mind about the ISM is it does also include services which are affected by drama in the Red Sea. Even just yesterday we had Houthis launch multiple missiles towards merchant vessels. Some of them missed, some of them were intercepted. Explosions occurred near the vessels. The Houthis aren't really good at aiming, apparently. Which is a pleasure, it's like a blessing in disguise. Well, it's more like a blessing right in front of your face. But anyway, the ISM figures could have been skewed by producer prices essentially being driven up by inflationary factors related to Houthis and their attacks. That doesn't necessarily mean we're going to have consumer price inflation. Remember, companies just have to take that in the margin. That's very, very important, and they do, right? It's very, very important that you remember there are two ways to really grow EPS, all right? The first way to really grow EPS is to grow your top line. When you grow your top line, you can hide a world of sin. Like when the top of the business is growing and exploding, you could really be running kind of a not very efficient ship, but be making money and growing, and your stock goes up, everybody's happy because the top line's growing. When the top line stops growing, you need to start refining all the fat at the company, and then you can actually grow EPS as well. So both of those things are important. Now, obviously, best case scenario, you do both of those in conjunction, but that's not always possible. What are they yakking about over here? Oh, Kashkari.
If the labor market continues to be quite strong, that would give me confidence to say, well, we can dial things back quite slowly from here. If we saw a material slowdown in the labor market, then that would say, hey, maybe we need to start cutting rates a little bit more quickly. And so that's why it's the speed of the reductions that the labor market.
That's totally fair, by the way.
Influence over.
So how many rate cuts are you factoring in for this year right now, given this latest information? I mean, if the Fed dot plots were suggesting 6 rate cuts, what do you think is more likely?
I mean, I think we're going to put out a new dot plot in March. We'll see where I'm ultimately at, given the data that we get between now and then. Sitting here today, I would say 2 to 3 cuts would seem to be appropriate for me right now. But again, I don't want to prejudge things, but that's my gut based on the data we have so far.
Okay, that's a very different picture than what the market had been anticipating. This week, we did see the 30-year mortgage rise above 7% again for the first time since December. And that's a pretty significant number for homeowners. Does that concern you at all?
No.
Well, that's a great example, Becky. When we went from 30-year mortgage rate at 3% all the way to 8%, I would have thought that would have slammed the brakes on the housing market. As I put in my essay that we published on Monday, remarkably, construction employment has continued to grow over that time. Investment in residential investment has been roughly flat. So there has been remarkable resilience in the housing market, whether it's single family or bleeding over to multifamily. That's been surprising to me. I would have thought that 7 or 8% mortgage rates would have been a bigger constraint on demand. That's also what makes me question how tight is monetary policy relative to what we consider the neutral rate in this reopening economy.
The commercial real estate entire industry will tell you that they are in big trouble, at least anybody who's an owner of any of these loans that need to get repriced. Anybody who's out there maybe potentially on the sidelines thinking they can step in and get a better bargain wouldn't go along with that. But how much does that weigh on you? The idea that there are a lot of commercial real estate loans that if they don't get refinanced are going to be problems. And then there are banks that hold some of those commercial real estate loans, New York Community Bank Corp, the pressure that we've seen it under over the last week.
Yeah. 22%.
Well, we're paying attention very closely to it. I do want to make one adjustment to what you said. It's not commercial real estate across the board. It really is focused on the office sector. Many other segments within commercial real estate seem to be doing very well. And so I think that delineation is important. And we think it's going to be on a bank-by-bank basis where we see pressures flare up, and our bank supervisors are in very close contact with other supervisors around the country and, of course, with bank management to monitor their portfolios. So it's something we're watching very carefully, but I do think most of commercial real estate is doing well. It really is just the office segment.
So that is not enough for the Fed to really be concerned, though. I guess the expectation is you don't think that this is a big problem that spreads through a lot of the banks?
As of right now, again, you never want to say never. As of right now, it seems to be more idiosyncratic to individual banks with individual exposures rather than systemic. But again, we're monitoring it very, very carefully.
The other issue that people will point to is the amount of debt that we have as a nation, and the idea of trying to sell treasuries at 5.3% versus 3%. I mean, that's a big deal, too. Does that ever come into the conversations or the thoughts at the Fed, just what happens with what we're going to have to do?
Not for the Fed. Ultimately, the amount of treasuries that get issued, the amount of taxes and spending, that's up to the Congress and the U.S. Treasury Department. Our jobs are to just take those inputs and try to model what they mean and ultimately achieve our dual mandate goals. So that really, for us, is the distinction between fiscal and monetary policy.
Neil, is growth, economic growth, by definition, do we know for sure that it's inflationary? And where I'm going with this is that you could make the case that if it's not inflationary, there's no reason to try to ever curb economic growth. You ought to let the good times roll. In other words, there'd be a reason, I guess, to bring rates down, because that's expensive too. That's inflationary. It's hard for business development. So it'd be nice to keep rates as low as you could. But on the other hand, do you need dry powder for the next time there is an actual slowdown to cut? What is a more
right? That's basically he's asking: should we stay at 2%, 2.5%? Where do we stop?
Well, I think the core of what you just said, Joe, the scenario you just gave is really about productivity growth. If we do see a big boost in productivity because of AI, for example, then you would expect a higher growth rate, which is non-inflationary. And that would be really positive. And then you would expect then the neutral interest rate would likely be higher in that environment. And then we would adjust policy to not try to tamp down growth, but just to respond to the economic environment. So in that situation, you'd see strong growth, not a lot of inflation, and monetary policy would be supportive of that. And so I hope that's what in the end, I hope that's what we end up seeing.
And Neil, as you were watching 60 Minutes, I'm sure it dawned on you that there was a voiceover in the middle of it that seemed to suggest that the first interest rate cut would come in the middle of the year. And then there's a whole bunch of people who went to read the transcript of exactly what Jay Powell said, and it wasn't exactly like that. What were you thinking when you watched that part of it?
We touched on that when we covered it live.
Well, to be honest with you, I wasn't that focused on the voiceover at that time. I was focused on what the chairman was saying, and I thought the chairman was on his message very clearly. And so I didn't think much of it at the time, but I understand that it led to some questions from investors going forward. But that's why I'm glad that they put out the transcript so investors could see for themselves.
And then
that's pushback against Summer
about the presidential election, and most folks on the Fed say, look, we can't think about the election. The election has nothing to do with this, and we need to be seen as independent of the election. But when it comes to being seen as independent of the election, you have to somehow think about it. Does it ever even come up in the conversation?
Honestly, it doesn't. The only thing that comes up in the conversation is us reminding ourselves that we must be non-political, that we must always conduct monetary policy based on what we think the economy calls for, what the data is telling us. And the only way for us to do our jobs is to hug that mast as tightly as we can. So the only time it comes up is us just reminding ourselves that's our job and we must not stray from it.
So what are the next 2 or 3 data points that are going to be most critical that you'll be watching most closely?
Well, it's always the same. I mean, it's looking at the actual inflation data. Well, let me back up. Because our models have so utterly failed to forecast the high inflation, to then forecast the disinflation, which is a good problem to have, I've been saying we just need to look at the actual inflation data to guide us. So I'm looking at the actual inflation data and then all the subcomponents that we look at: core inflation, housing inflation, services, goods inflation, and then, of course, the labor market and looking at wages. And so far, the data has been resoundingly positive. I hope it continues. And then the question will simply be, at what pace do we then start to adjust rates back down? And ultimately, where is that destination? I mean, a big question mark for me, where is that neutral rate once we ultimately get through this reopening period? There's a lot of uncertainty around that. There are good arguments to suggest we're going to go back to the old rate environment, but there are also compelling arguments to suggest we could be in a longer, higher rate environment going forward. We're going to have to see how the economy performs before we draw any firm conclusions.
Your gut, though, just in terms of, I mean, it sounds like you think it is going to be a higher rate structure.
It seems like there's some big fundamental changes in our economy that have been longer lasting than I expected. I'll give you an example. When the pandemic hit and the services economy was shut, people were flooding the goods market. And so you saw huge goods inflation and goods supply chains were stressed. Now that the services economy is reopened, remarkably, people are still buying more goods than they did before the pandemic. So it seems like there are some longer-lived changes in consumer behavior that we're having to pay attention to. And especially when you think about work from home, it doesn't seem like we're going back to the old world. We may still adjust from here, but not go fully back. It seems like there are longer-lived changes in behavior of businesses and of consumers, and how that plays out into the rate environment, we're going to have to see.
President Kashkari, thank you. Neil Kashkari from the Minneapolis Fed.
That's sort of an interesting point of view, this idea that, people are still spending more than they were spending, and who knows how that's going to affect inflation. It's always this concern about inflation. What's also very interesting is just to show you sort of a difference in what guidance can do. You look at a company like Enphase, and the guidance was actually, well, let's just put it this way. The numbers were bad, right? You had a miss on Q1 revenue, looking at 280 million versus 318. You had adjusted EPS holding for Q4, but a big miss on inverter shipments. Margin actually went up because they're keeping price up. They're basically saying like, hey, look, we're just going to sell less until we get through this sort of interest rate period, but we're not going to sacrifice our margins. They're at 47.4 was the estimate for margin. They came in at 50.3. They're making 50 cents on the dollar off all these inverters. Gross. That's really good. But they missed on revenue. They missed on guided revenue. Why is the stock up then? Well, the stock's up because you've got a CEO that says Q1 2024 may be the bottom of the market, and here's what we're going to do to get out of this bottom. And they talk about expanding battery production and sales to India, and essentially suggesting, hey, look, we're going to keep our margins strong. We're going to do everything we can to make sure that we're one of the best, and we have the strongest pricing power coming out of the interest rate bottom, or peak, so to speak, which is creating the sales bottom, and we think it's up from here. Like, that guidance is really important. Now, obviously, if it's wrong, then that's not good. Then people get sad. But it's also indicative of a company that probably is going to conduct even more buybacks in the future, especially with those sort of margins. So I think it's very interesting. You see the difference in a company like Enphase and a company like Palantir in what they provide in their guidance, and how they talk to Wall Street compared to, frankly, Elon. Now, as a long-term investor, does any of that really matter? No. But in the near term, there are plenty of people who just bail out of a stock because, of short-term performance. Okay, so, yeah, they only repurchased, by the way, $100 million of common stock in the 3 months ending Q4. So it'll be interesting to see how much they're rebuying here in Q1, especially since now they're calling Q1 their bottom. They've got probably another, $800 million worth of money that they can go shopping for the stock. Who knows? Maybe that's them shopping in pre-market. But I think that's very interesting. Yeah, free cash flow, 15.4 mil. It's low, but it's free cash flow. Quarterly revenue, 302 mil, which again was lower than the 320 everyone was looking for. So, yeah, their average share repurchase was at about $84 in Q4, about $100 million. And again, they're authorized up to about $1 billion. So, and I think you've done that for 2 quarters in a row now, so you've got about 800 left. So the bulk of their rebuying is still ahead of them. And if I quickly look at their balance sheet, super quick, balance sheet, I just want to see what assets they have. Oh yeah, okay. So we're sitting at about 1.7 in cash and marketable securities. If I go into, oh boy, let's see, 1406, 286. Yeah, exactly. Okay, so that's about 1,700 minus no debt. Oh, wow. I mean, they have some long-term debt, about 1.3 billion of long-term, but really no short-term other than payables. So we've got about 1.3 billion dollars in the short term available. They could literally pay off all of their debt with the cash they have. But instead of they're planning their buyback, which is fine. But it's very interesting. Balance sheet is very robust. Anyway. Oh, interesting. Tesla staff are bracing for job cuts after managers were asked whether employees' positions are critical. Oh, how entertaining. Yeah, Kandu, stay tuned for an update on the babies. It's been rough the last few days. Let's just put it this way. I'm sick of getting phone calls from the hospital in the middle of the night. It's not good. Of course, I was there. The babies are split up in 2 different hospitals. So anyway, I'll provide an update. It's a lot of traveling. Anyway, okay. Anyway, so where were we? All right. So what do we got? Okay, pre-market. You've got 17% here on end phase. Oh, look at that near perfect rejection on the 118. It sounds like a highway, because it is a highway. Anyway, so we'll see. We seem to be, looks like we're going to open up in the channel between here. We've been kind of in this very bad no man's land. New York Community Bank dropped another 22% yesterday. It is up about 5% now in pre-market. It's probably pure speculation. Wouldn't be surprised for this to go down. The New York Community Bank issue is I think severe, mostly because I agree with Cameron Cruz from Bloomberg, who says we don't know how their underwriting, like how good their underwriting actually is. And so when they say, oh yeah, we're down 500 million, how do we know they're not actually down 1.5 billion? That's the essential argument. We don't. That's the thing. There's such a lack of price discovery. You don't know that. Who are they talking to? Sports. All right. Tesla, after this potential of job cuts, by the way, jumping a little bit. It's, this is this is very common in the market right now. Maybe Elon's been paying attention to what we've been saying. I'm just kidding. I'm not trying to pat myself on the back here, but it's very obvious that when, I mean, we said it earlier in this video, when earnings per share are not growing the way they should, what do? It's very simple. You cut expenses, or you grow the top line. When you can't grow the top line, you just cut expenses. So when you cut expenses, stock up. Stock was up about 2.3%, or 2.2% yesterday. Looks like in the pre-market we're up about 2.8%. You're getting a little bit of enthusiasm again towards the interest rate sensitives. And you had a little bit of a pullback on AI yesterday and the chip adjacents, specifically NVIDIA here and AMD. I will say, I got to make videos on all this. I have so many videos that I want to make. There's a limit to what I can do because I have to get back to the hospital, but I'm going to do what I can this morning, so we'll see how productive I can be. Gotta run like 3 different businesses, although the team's been really great, so shout out to them. Okay, so anyway, all right. AMD. Yeah, yesterday I was reading some great things about AMD, and AMD. One of the things that I love about NVIDIA that most people don't understand is NVIDIA will sell you your networking infrastructure. And then when you set up your infrastructure on NVIDIA, you're basically committing to using NVIDIA. That's very powerful because you're going into like the Apple Venus flytrap. AMD realizes this, but they don't have an InfiniBand network. So what instead are they doing? They're working with Broadcom and Cisco on creating their version of basically what they call like the ultimate. I think it's the ultimate Ethernet consortium. And it's very interesting. AMD knows exactly where they don't have the moat that NVIDIA has, and they are fighting. Like the feisty company that's like, no. Don't forget about us here. So good for them. Okay, very good. So, have you seen other companies such as Tyson Foods are starting to name drop Palantir as a reason for improved margins in their earnings calls? Oh, that's very interesting. If I wasn't traveling yesterday, I would have loved to have read the Tyson Foods earnings call. I personally think Tyson Foods is always an interesting one to look at because it was actually one of the early stocks I looked at as an early tell for what inflation was doing. Because they're a company that they have, in my opinion, zero pricing power. When you sell a commodity, you don't have pricing power. You are a participant in supply and demand. That's it. And that's not to be confused with interest rates, which obviously can affect supply and demand. But you're selling something that in itself is not preferential over somebody else selling the same thing. You selling a bushel of hay makes no difference to my bushel of hay. You selling gas at Chevron at the corner of, I don't know, whatever, Main Street, and me selling gas across the street at a mobile really makes no difference. Like, our product is the same. So our margins are going to be tiny. The only power we have to really attract you in is by lowering the price of gas relative to the competitor across the street. Now, of course, interest rates have led to lower prices for Teslas, which I don't necessarily think is the sole and best strategy. But when you compare these to other EVs, still much more individual desire for the product, where there's really no difference for the desire for the product at a different gas station. I mean, maybe your convenience store is better, but that's where the margins are made. It's like a movie theater. They're not making money off of you buying a movie ticket. They're making money off the concessions. The studios make most of the money off the movie theaters. So it's very interesting. And so I see Tyson Foods as a commodity. Like, I'm not going to buy your chicken over their chicken. I'm just going to buy the chicken that's more affordable. That's a lack of pricing power. And so when we remove interest rates from the equation, which I'm not saying you can do that in the analysis of a company like in interest rate sensitive stock, just solely in the analysis of pricing power, people's desire for one product over another, regardless of interest rate or irrespective of interest rates. It's very interesting. So Tyson, this is the Tyson earnings call. And so let's see here. If we go into Palantir, no, I don't see Palantir mentioned in here. But I can just try to punch in like commercial. No, nope. Commercial, Palantir, data. Let's try data. Export data, monthly data, data in general. I wonder where they mentioned that. But, oh, look at this. The team has done great increasing the true business performance through the data and analytics platforms they've stood up. Allow for better decision making. So maybe you sort of have like the implications here of like, hey, well, companies are actually starting to implement the use of AI, which is really just big data. Remember, AI before it was AI was just big data. Every AI or every big data company has just turned themselves into AI. It's just like the fancy buzzword. Tyson has pricing power called price fixing. That's funny. That is funny. But that's very. It's a funny phrase. Price fixing is not really a way to resolve markets. It enables the entrance of competition that ends up destroying you.
Rate cuts not on the horizon. It still seems to be melting up, maybe on earnings. Is that what we're seeing?
Yes, absolutely. You know, of course, the Fed and the direction of interest rates are important for markets, but what's more important for equities is really earnings and inflection points in growth. And we're seeing that. We're seeing economic growth and earnings surprise to the upside, and previously depressed areas of the markets are now seeing, some signs of life. And so we think that that's important for a broadening out of the market. We still continue to like tech and recognize that though the performance gap is likely to narrow this year. And so you need the other participations of the market to get upside from here. I mean, admittedly, I would say in terms of our upside scenario, we are looking for about 5,000 on the S&P 500, and we're close to that level. But the upside scenario does call for 5,300. All
right, hold on. So, Tyson, large client of Palantir. Okay, well, yeah, they don't mention it. I guess maybe if we know that they're client of Palantir, then the earnings call does reference them with sort of the data platform they're standing up, right? That's fair. So that's great, and I believe that. It's one of the reasons I'm invested in Palantir, is because I think the commercial application for these larger companies is very critical, and I think that's a real use case for AI rather than just like, okay, you talking to Bard or GPT or whatever. Those, and don't get me wrong, those are great, but I don't know that they are as profitable as a commercial implication relative to what you've got over at Tyson or otherwise. But I think this is very interesting. Look what I found just in the moment here. This individual is talking here. This is Tyson. Lower pricing primarily reflects the mix impact. So in other words, people are buying like products that have lower margin. But look at this. Moving on to chicken. Sales in Q1 declined 5.4%, primarily driven by the impact of lower commodity protein prices. See what I said? Chicken is a commodity. Volume declined 1.5% to lower production. So you literally had sales decline and volume decline, but sales declined more. Okay, so when sales decline about 4% more than volumes, well, what happened? Okay, well, you go over here. While input costs were clearly a tailwind, they were largely offset by the impact of lower pricing. RIP. Same thing with pork here. Q1 down modestly as volume growth was offset by lower pricing. Beef revenue increased 6.4% with lower head throughput more than offset by higher prices per pound. Interesting. So you've actually got a little bit of a push up here in beef. Inventory valuation adjustment though. Oh, but that's interesting. But their inventory was written down. Fascinating. Operating loss. Nearly half of the operating loss was driven by an unfavorable inventory value adjustment, primarily due to the rapid and significant decline in cattle futures. So on a weird side, the consumer is being offered, at least in this quarter analysis, lower chicken prices, lower pork prices, slightly higher beef prices, but beef prices are plummeting into the future. RIP. Our net leverage declined. Well, yeah. This is very interesting. Very, very, very interesting. Okay, so what else? Main focus, assessing our competition, meeting our consumer needs when making pricing decisions, blah, blah, blah. Yeah, whatever. So, cool. Let's keep going. Thanks so much, Kyle. Yeah, stay tuned with a bigger update there on the status of the little ones. Anyway, okay, so let's see what else. I want to see what the suits are saying today. The suits always have an interesting point of view, but they're in a special little spot I'm going to peek at. 29 minutes from the opening bell. Bond market up again. You're at 4.11 on the 10-year, which if we look at the 10-2 inverted yield curve, so the spread between the two, we're sitting, what, negative 30? Yep, negative 30.6. Okay, then you've got the suits are saying big banks are positioned to take market share in commercial real estate, weighing down many banks on the regional sector. Absolutely. Absolutely. The big banks like your JP Morgans, in other words, and otherwise, they are absolutely crushing it. And JP Morgan, for example, it's wild because, you know, they cut, like Jerome Powell calls them for stimulus checks, basically. Hey, can you buy this bank? We'll backstop, you know, some of the losses or most of the losses, like 85% of the losses. It's crazy. It's literally getting wedge deals on banks. Oh, we love that. So yeah, somebody here is writing, oh, why is Snapchat down on a beat? Well, you have to remember how the market works. So Enphase missed, but it's up on guidance. Snapchat beat, but they're down because of guidance. So their EBITDA outlook missed by like a factor of 2, slightly more than 2 actually. So yeah, 75. So it takes 75 mil, which is what they're guiding, divided by 32.7, 2.3-ish times basically is what their bottom line missed by. And so guidance is so important. It once again shows you why people are so frustrated with a company like Tesla that just doesn't provide guidance. You don't provide guidance, people leave. So, yeah, not a surprise. Baba, yeah, we did talk Enphase already. I see your comments. Let's go Baba. So, okay, Baba to increase their share buyback program by, I believe these are all in yuan, 25 billion yuan. Well, no, actually it says US $25 billion. Okay, that's a lot of money. Their Q3 revenue missed a tiny little bit. Earnings per ads missed a little bit. It looks like it is popping a little bit here in pre-market. Wait, does it? No, nope. Now it's falling. So it ran as much as 5% up, but now apparently it's falling as they're talking about seeing their verbal guidance, talking about what is this here? Alibaba to find the right time to seek capital, not in a hurry. Alibaba to focus internally during challenging market. Well, yeah, there's your killer right there. It's like they can announce whatever they want, but as soon as you talk about like, yeah, things are bad and we don't know how long they're going to be bad, people get upset. So people bail. That's the way to put it. I'm gonna make like a little summary here. Why guidance matters. Okay, so let's watch this. Okay, watch this. Baba, you know, massive buyback and nearly matches estimates, but guidance says challenging market with no with basically no guide on end of that. Stock down. Okay, then you have Snap beats, but double loss I'll say 2.3x. 2.3x loss on EBITDA guide. Stock down. Okay? See where we're going with this? Okay. Then you have Palantir, beats, and excited guidance. Stock up 30%. Okay. Then you have Enphase. Enphase. Q1 may be the bottom. Wait, well, I should say big miss, but Q1 may be the bottom. Stock up 17%. Okay, now Tesla, no guidance. Stock way down. See the point? And the phrase that you want to remember, always remember, securities are sold, not bought. There you go. I love that line. That like totally explains why stocks move the way they do. Securities are sold, not bought. All right. So what else? Okay, so then we have, that's all up on eHack. Today, we're trying to move eHack, by the way, to our new system, so stay tuned for that. That should be very exciting. Oh, Roblox came out. Roblox beats 1.13 versus 1.08. Bookings, let's see, adjusted EBITDA, -55 to -15. When are they ever going to make money? Let's see here. Margin expansion by 100 to 300 basis points this year. Well, each year they're hoping. Expects compounded top-line growth of 20% through 2027. That's great. Managing growth and fixed costs, including headcount. Kids spend more on games. Wow. Their revenue actually beat their guidance. Their full-year guidance beat. Once again, guidance. So, I mean, we could throw that one in there as well. Let's see here. Roblox. Roblox beats on guide. And the user count also beat slightly. But their revenue missed. Bookings up, but revenue slightly down. Something right. Revenue slightly down. Users beats on guide, stock up 11%. At least that was the last read. Let me see what's actually going on here. Yeah, 11%. There it is. All right. A little summary there on eHack. eHack.com. Okay. So let's see what else it has. So Alibaba down. Again, it's all a guidance game. SolarEdge up, moving with obviously the solar market. New York Community Bank. Oh, there it is. Look at that. Now down another 6%. I had a feeling that was not going to be robust. That is their pre-market surge. I did not think was going to be robust. This pre-market surge is often driven by retail dip buying. And really, you don't have a lot of... Well, let me see what it is. Yeah, okay, executive chairman. None of that matters. The volumes are not very high. Let's see, 30,000. 30,000 times 4. I mean, you're talking about $120,000 are being traded per minute over here. It doesn't take a lot of extra buying to push the stock up. You could have an extra $10,000 of buying a minute, and it'll drive the stock up. But that can quickly, it's not robust. Is New York City a dip buy? I'd buy in New York. I like New York. We don't own in New York with House Hack, but if there's a good deal, I would not be opposed to parts of New York. Yeah, people are so scared of rent control. They don't understand how to play the game. It's all part of the game. But I won't invest in LA as an example. So there's some choices. I try to stay away from rent control. But anyway. So, Snap's down 31%, Dave & Buster's 2.3%, Wayfair flat, Trade Desk flat, FICO flat, Costco flat, but that's been up. Nvidia 20 bips, Amazon 19, Ubiquity sitting at 128. Did we get any Ubiquity earnings yet? I should have gotten Ubiquity earnings. Let me take a peek. 20 minutes now until the bell. Okay, we'll listen in here for a moment. Well, let's see if I can actually get... Yeah, here we go. Ubiquity, no. When are their earnings? Earnings should be soon. Earnings estimate to 216. Okay, so we got to get through Valentine's Day first. Fine then. All right. What do you got, Jimbo?
It's $43. No, I'm not paying that extra $43. I'm going to Chipotle. But
Oh my God.
The trade-off here is
You're right, and even then, you may not get everything you're looking for. You know, there might be some game if you're that you're not going to get. But I get it. Completely understand why they would be trying to do this. You've got to try and keep the subs and/or find new ones if you can to support these networks.
Why are they so boring? The 5 o'clock hour is so much better than the 6 o'clock hour. It's just like random yapping. We need data. So speaking of data, you know, I heard this about, but I haven't seen it yet. I heard that Snapchat was blaming the Red Sea on their miss, or the Middle East at least. Let me see. I don't see that. Yeah, I'm in the Snapchat earnings call, so I don't see that. But I was hearing that there was some blaming of maybe geopolitics. Let me see here. No. Yeah, but I heard that. I can't fact check that. So again, I thought I'd quickly be able to see that here. We're really excited about the progress we're seeing, especially in our lower funnel businesses with small and medium advertisers. Purchase conversions grew 90%. Yeah, from a little to a little bigger. But the growth numbers, when you go from a small number to grow numbers on a percentage basis is you know, kind of wild. Like, let's say you bought one property in December and then you bought 10 properties in January. You could be like, we're growing 1,000% month over month. Okay. You know, it's completely skewed data. But people like doing that. Anywho, all right. What else on the suit? So we talked banks. New York Community Bank plunges to 1997 low. Oh, yeah. European stocks offering shareholder... that's boring. Benjamin Graham may bemoan a lack of fervor for UK stocks. Investors haven't really warmed to UK stocks, but they may be overlooking compelling value. Imagine two economic powerhouses roughly of similar size. Country A has an earnings yield of almost 9%. Country B just about 5%. Former also offers 3 times the dividend yield of B. Which of the two stock markets has outperformed year over year? If you think A, think again. Country A is the UK, where the stock domestic market has been relatively lackluster. Interesting. Almost twice the dividend yield, yeah. And then country B, which has half the dividend yield, has almost doubled in value. Yeah, but dividend yield isn't the only metric to really consider with a stock. You have to look at growth prospects. That, you know, I mean, you could look at like an AT&T. How are they doing? AT&T's got a nice div yield. AT&T. Okay, there we go. T. Okay, so here's let's just go to them on a month chart. So this is their month chart. You know, this goes back 2 decades. Somewhat lackluster performance. Go back to the week chart, and you're basically down for the last, what, at least 8 years. And what's their dividend? It's like 7% now, or what? 6.3%. So, not the only thing that matters. All right, what else? We talked with Tesla on the job cuts. KKR mortgage REIT falls after cutting dividend on troubled loans. Well, yeah. I mean, if you're exposed to mortgages right now, I don't know. That's not great. Let me see here. KKR Real Estate Finance. Really? KKR Real Estate Finance Trust. There it is. down 5%. Their stock, it's pretty volatile actually. Well, no, never mind. It's just moving within these bands. That's actually not abnormal for a REIT. So, what is this ticker? KREF. KREF. Oh, yeah, it has a dividend yield of 14.6%. Wait, why is KREF? Oh, this might not be. There we go. This is the better ticker to look at. This one has more volume. KREF. I mean, you just gave up a year's worth of a dividend in a pre-market move of nearly 12% here. What's Visi? Visi, what is that? Visi Properties? Visi stock. What is this? Visi Properties, real estate investment trust specializing in casino and entertainment properties. Oh, that's pretty cool. Dividend of 5.56. That's very cool. 1 year performance though down 13%. 5 year up 5%. Okay, I mean it's nicely up for a REIT since 2017. That's good. New York REIT buys Venetian Resort for $4 billion. Oh, that's cool. Oh, that was back in 2021. Oh, that makes sense. Venetian, Vinny, Visi, whatever. So, okay, let's see. We are 13 minutes away from El stock market opening. Interesting. NASDAQ rally can last despite earnings waning breath. So when you hear waning breath, you have to think fewer stocks are going up and the spread between the stocks going up and going down is widening. So like, I guess the way to put that is if you have like, I don't know, in the S&P 500, 260 stocks going up and 240 going down, and then all of a sudden flip-flops where you have like, 200 going up and 300 going down. That would be reducing breath. Anyway, while one of the world's largest exchange-traded funds sits at a crucial inflection point, further gains may be in store in the coming weeks and months as it teeters near crucial technical thresholds. Take the Qs. Okay, let's look at the Qs. It's pronounced Vici. Oh, okay. Yeah, stay tuned on the little babies. We'll be posting a video on them. Well, I'm just going to film a quick video update and give you all, but we'll do that in a video. It's, there's a lot. That's not a quick update. But anyway, yeah, 58 bips here on the Qs in pre-market. And so what are they arguing? They are looking at the technicals. They say it's trading near key resistance level. Okay. Relative to the SPY. Oh, relative to the SPY. Yeah, I'm like, what resistance level? I'm not seeing that. And so they're dividing the QQQ by SPY and looking at a ratio there basically. And saying when the NASDAQ outperforms and breaks out of that ratio where it has been over time, it can actually lead to more NASDAQ outperformance. Well, that implies a lot of people are paying attention to that. I'm not particularly sure about that. But then again, from a practical point of view, I don't necessarily disagree, given that you have pretty enthusiastic, how should you say, tech market. All right, good. What else? So bond yields up a little bit before the auction. New bond auction. We'll see how that goes. Yeah, up about 1.6 basis points. That's fine. Okay, next we have Year of the Dragon is arriving with a dead cat bounce. That's referencing China. Let's look at KWEB. How's the technology ETF been in China? KWEB down another 2% in pre-market. It's up 6% yesterday, but boy, you've got yourself a little downtrend there. Let's see if we can draw that out a little bit. I mean, it's visibly pretty obvious. Whether we get the perfect lines in here right now, I don't think matters so much, but may as well try. There we go. Something like that. Could be a little better. But anyway, it's got a pretty clear downtrend. TSMC monthly sales rise in January after strong AI chip demand offset continued weakness in consumer electronic products. Yeah, they're planning another facility in Japan, by the way, which also very interesting. That's probably a potential buy of the dip market too. Is if you were going to build something, build it in Japan where you've had so little growth, people looking for jobs probably get stimulated by the government. Like, hey, anything to bring GDP back.
I'm a big. Now I'll read 10 calls every night, and
No, he doesn't. If he read 10 calls every night, we would hear much more coverage in the morning.
there was no mention of how poorly they're really doing. And there was a critical moment on the conference call where an analyst said, "You guys, when are you going to get scale?" And correctly, he said, "We have scale. We have 800 million viewers." The problem is this: you have a person who's 11. That's not your core audience. That 11-year-old is not going to buy a Tesla. That 11-year-old is David, is not going to the supermarket and buying Lay's potato chips. That 11-year-old is playing Roblox. We saw good numbers there. But, you can't make a business anymore on what a 12-year-old is going to spend, how much they're going to spend on Colgate. They may that very moment start thinking about Colgate, but by the time they get to 18, they're buying on Amazon.
And they're not buying anything? They're not going to Temu or something like that and
Have
buying
you
something
seen,
there?
Oh, I
or-
bought some stuff from Temu for my wife. Oh, my God. She said, "Did you get this? This stuff is from China. I'm not wearing this on my body." I said, "Well, yeah, but it was like $12." She goes, "Oh, well, then fine." I mean, I tried to get Temu because I wanted to see how much the Chinese communists want to know about me. And at the last minute, I pivoted and bought it from Amazon because I decided that they want me to buy Baba.
And you
I'm
think,
saying, look at
and
the-
you think whatever it is you bought from Amazon wasn't made in China?
No, I directly bought from Temu from Amazon because I didn't want Temu to know everything about me.
Oh, I'm sorry. You did
It's just
buy
Yeah, interesting. Anyway, yeah, the Temu stuff is, I don't know. I mean, it looks too good to be true when you look at some of the pricing, and some of the stuff is worth getting, but then you buy some of the stuff, it's like, this is like dollar. Like, if I was going to supply like a Five Below store with stuff, I would just buy it all on Temu. That's the way to do it. Stock up your Five Below with Temu stuff. So you can't call them dollar stores anymore. There's too much inflation. Which what was wild yesterday. Tell me what you think about some of these prices. I was at the hospital. The menu. It was crazy. You ready for these prices? Hold on. I want to take like a little screenshot here. But these prices were insane. And I was blown away. And there has to be a rationale for that. Hold on. That'll come through eventually. How is it taking so long with AirDrop these days? It's the Apple products. Sometimes they work, sometimes they don't. We'll have some more updates on the headset as well, by the way. Hopefully y'all liked kind of the headset video that I did. I'll have another one that I think will be really interesting because I use it to work in different places that are pretty functional, I think. But anyway, here is the pricing menu. Look at this. So, pancake special. 2 pancakes, 2 scrambled eggs, choice of bacon, sausage links, or vegetarian sausage. $5.20. Rice, $1.95. Pancake, $1.45. Scrambled eggs, $1.75. Hard-boiled egg, 85 cents. Bacon, 95 cents. Oatmeal, $1.65. Breakfast quesadilla. I had 2 of those. Breakfast quesadillas. $3.45. I'm like, bro, I'm gonna go eat here every freaking day because those are some damn good prices. I'm like, this is insane. It's like so freaking cheap. I'm like, wow. And so I was talking to the staff there. And I know it's a cafeteria, so it's cheap to make, right? But the point is, like, relative to you going anywhere else and trying to get this stuff, it's insanely cheap. So I'm like, wow, this is great. So I basically got like one of everything yesterday, and it was like my meal. It was like $16, and I basically had like one of everything. Coffee, 2 breakfast quesadillas, scrambled eggs, pancake, hard-boiled eggs, banana, apple. Like I got everything. It was like $17 for my portion. And I told the lady, this is great. I'm going to be here all the time. She's like, oh, how long y'all in for? And I'm like, probably a few months. But anyway, she's like, yeah, and like the pricing's so great. How could people not come here all the time? She's like, you'd be surprised. People complain about the pricing. And I'm like, what? What do you mean? She's like, yeah, they think it's still too high. And I'm like, okay, all right. Oh, look pretty good. Subsidized by parking fees. True. Parking fees are freaking nuts. Yeah. Yep. That is pretty wild. So, did you ask for an itemized bill after the NICU stay? Nope. You know why? Because we maxed our family out of pocket. Like, instantly. So, yeah, it was like day one. They called and they're like, good news and bad news. Good news is you've maxed your maximum out of pocket. Bad news is you owe your maximum out of pocket, which is like $7,500. But these children are gonna burn like, I don't know, $500,000 to $1 million in medical expenses now. So I mean, thank God for insurance. But anyway, so what else? Okay, Tesla up 2.5% in pre-market on talk about that good old job cut potential. We've got 3 minutes to go into the pre-market or into the stock market opening. Remember, folks, as we've talked about and outlined on eHack, you want your stock to go up. Two things you can do: guidance and increase margin. Margin and guidance. That's it. And with Tesla, you kind of have neither of those, or you've had neither of those. So that even though long run investors are very confident in those things, the market isn't getting those things. So very interesting. Okay. So yeah, man, we have a poopy insurance. We have to pay 20% after a high deductible. Well, so that's called co-insurance, but your co-insurance will still get you to what's called a maximum out of pocket. You know, so if you have $100K in expenses, you know, you might pay your $5K deductible, and then you'll pay your co-insurance of 20% until you go ding, maximum out of pocket. We have co-insurance too. It's 10%, but it doesn't matter. Look at the New York Community Bank press release. Ooh, I want to see it. New York Community Bank. Was it just the are you just asking me to look at the appointment of the individuals over there? I mean, I don't really care. They appoint somebody to a sinking ship, it doesn't matter. But what is this? New York Community Bank. Concentration without multifamily is reasonable. I'm telling you, there are problems in multifamily. No plan to take the dividend to zero. Shrinking below. What is this? Yeah. Oh, this is interesting. They did like a whole chat here. We'll reduce commercial real estate concentration as quickly as we can. Oh, this is the liquidation. Back up about positive 1%. The liquidation of commercial real estate exposure. Wow. Virtually no deposit outflow from retail branches. Well, yeah, I mean, you have the de facto bailout of the Fed after Signature and Silicon Valley Bank. Dividend cut was the right thing to maintain capital. No plans to raise capital, but we could if we need to. No, you can't. I don't know that you really can. Stock at $4.20. Like you're gonna be. Are you NYSE listed? Because y'all are gonna get booted from the stock exchange. They are. Yeah, New York Stock Exchange listed. They could get. You're under $5 for too long. You're gonna end up getting booted from the stock market. They can do that. They kick you right off the exchange. If your stock doesn't perform, you're not cool enough to be on the New York Stock Exchange.
It's Florida Bank Holding Company, South State, celebrating a recent transfer to the NYSE from the NASDAQ. Aerovent Biopharma focused on the unmet medical needs of cancer patients. Jim, I wonder, high-level view, if you've been impressed the way we've held in there after the worst couple days for treasuries in a year.
Look,
Wow.
I think that there's a 10-year today. So
Look at that. That's like 90-something% green. That's wild. All right, well, let's take a peek at where those moves are going. New York Community Bank is getting some of it, up about 2% after their call. KWeb, more China pain, down 3.2. Tough to bet on China right now. 62 bips on the Qs. You've got Enphase now up 22%, sitting above its good old technical here. The orange line's a technical. This is a fibby, so you have a little bit of look at that breakout. Look at that. Reject, reject, reject. Bounce off the moving average. Boom, breakout. Very interesting. NIO down 4%. It's China exposure. It's tough right now. Like I always say, I have enough Chinese exposure with Apple, Tesla, and Nvidia to really want to concentrate more into those is somewhat uninteresting to me. Snapchat down about 32% at the open on that weaker guide. Everything on the guide, mostly the outlook on loss 2.3xing. So a little bit of a oopsie doopsie there. You've got Super Microcomputer actually red about 1%, but I mean, look at how euphoric their stock has been. This is the week chart, so the fact that they're down 83 bips, who cares? That's nothing. Look at that. No surprise. Community Bank goes red. Yeah, institutions, I think, you can't justify holding it right now. That's going to be a tough one to justify. Rivian up about 1.4. Tesla, only about 1.6 at the open. So it looks like you had a little bit of a sell come through here. Apple, Amazon, the Qs, all sitting around that 0.6. How's Palantir moving today? After their 30% run yesterday? Oh, only down about 60, 70 basis points here. Not bad for a 30% run thereafter. There we go. Now down about 1%. You get some volatility there today. New York Community Bank back down 2%. Wouldn't be surprised to see another red day over here. And this company will collapse if their stock keeps going down. Because remember, they're like, oh yeah, we'll raise money if we need to. You can't raise money when your stock is plummeting. You screwed. Absolutely screwed. So, Fubo. Let's see what's going on with Fubo. Fubo, let's see. Fubo falls as rivals plan sports streaming service. Oh, yeah. Well, I mean, that's not a surprise. ESPN and Fox's sports streaming deal holds promise at the same time as, therefore, Fubo dumps, what, like 20% now? Oh, there you go. 20% to the downside on Fubo. Yeah, NIO, I wouldn't say that NIO's going out of business, but boy, their stock's certainly getting hammered as well. Yeah. Oh, it's actually popping up a little bit right now. The thing you've got here is the Chinese market is a very, very difficult market to have exposure to right now. Now, that might be the perfect time to get exposure to it. And that's the challenge, right? When things are in the toilet, is that the time to buy it? Well, I mean, in my opinion, in the case of interest rate sensitive stocks, the answer to that is yes. Of course, that opinion could be wrong. And for many people, they would rather than make the bet on interest rates coming down, they'd rather make the bet on China. I mean, I don't see a problem with that. It's just not for me. Probably because I'm personally so convinced that even if it takes longer, inflation will go down. But I'm not convinced that even if it takes longer and even if I'm more patient, China will be okay. China could turn into Japan. But I'm convinced interest rates are going down over the long term. Again, how much is totally up for debate. But, I think you got to kind of invest where your conviction is. Otherwise, you're just going to paper hand when things get tough. So, I mean, that's really what paper handing is. It's when you don't have enough conviction to be in something. And now if the facts change and you sell, that's totally fair. But anyway, so looks like Snap's trying to recover a few percent here. Yeah, look at that. Snap's trying to go green a little bit. And you got a little bit of a sell down there on Tesla at the start. Dave & Buster's up another percent. Dave & Buster's might be moving on Bolero. Bolero has actually done very well over the past few days after their earnings. And I think that's probably driving the entertainment industry, so more potential spend over at D&B. Dave & Buster's, great place to get food if you're ever in Puerto Rico is Dave & Buster's. Okay, I'm just kidding. But that is what we did when everything closes at like 10 o'clock in Puerto Rico, and we're like, yo, it's 6 in California. Where's dinner? So we had to go to Dave and Buster's. Now, so if you're ever in Puerto Rico, there you go.
You shouldn't have owned it because they didn't disclose the conflicted board, of which everybody in America knew there was conflicted board.
Yeah.
But I just think that let's score one still for the idea of moving to Texas for Elon.
I would assume he will end up reincorporating in Texas. He's already moved. We keep moving. They have their headquarters in Texas.
Because they'll rob you at 7 p.m. in Puerto Rico? Oh my gosh, stop.
Texas's corporate laws as opposed to those of Delaware, which are by far the most ubiquitous. And clearly you have a very well-defined body of corporate law there that shareholders typically like.
Yes, shareholders typically.
All right, whatever. Okay, good. So let's get a little bit of additional news here. Max, you're saying the Wall Street Journal's talking about the U.S. being the next Japan? No way. Not this cycle. Maybe in the future. But the U.S. is going to be a substantial driver of growth, I expect, for at least the next decade, if not decades. Yeah, I mean, even just with what we've seen with the AI revolution itself. So, all right, what else? What else? We talked Snap, we talked Enphase, we talked Tesla layoffs, we talked earnings guidance, price. I mean, this has been pretty productive. We've talked a lot of different things: inflation, food. Started talking about breakfast. Somebody asked me, do I think Tucker Carlson is going to have an aggressive interview, like softball or hardball with Putin? I think Putin's going to do most of the talking. I actually don't think that it's really right in any interview to make somebody feel like trash. You have to let the person speak, and then the audience can make up their mind about what they think about a person in the interview. But you have to be very careful to fight somebody in an interview, because it doesn't make people want to be on an interview with you, like other potential guests, right? If you're hostile. Anyway, here's 4.2% on New York Community Bank. More downward rotation. So we'll see. I didn't know Kramer talked Enphase. That's funny. Did he? What's he talking about right now? Eli Lilly. Eli Lilly's killing it. Yeah, those weight loss drugs. Maybe I got to get into the bios. I mean, I'm not. But Eli Lilly's just crushed it. Come on. Eli Lilly. There it is. LLY. So, yeah, look at their stock. I mean, they're up, what? A lot? These weight loss drugs were really starting to kick butt around early 2023, and their stock's doubled since then. Oh, New York Community Bank gets halted. It's happening. They're not going to be able to stop this. They're just not. Yeah, the interview's done, but I think they're posting it tomorrow. Yeah. So, very interesting. New York Community Bank, now a $2.8 billion bank, just lost $200 million in market cap. Down another 4.5%, hitting a halt on probably an imbalance. Mostly, like if you get too many sell orders and not enough buy orders, they issue a halt. And the reason they do that is so you can let more buyers potentially come into the market. But, you know, if there are way more sellers, you could end up really pushing that away. Palantir, it's a game changer right here. Look at that. Big fan of Palantir. I think they're almost your more certain profitable AI company. Big data. I still think of them as big data. I think you should do a video on the U.S. Social Security going bankrupt. Well, they've been talking about that for years, and it'll happen eventually. But if we get enough money printing, we'll just deficit finance it. And the only way that's offset is by productivity. Otherwise, you'll get inflation. So you got to have productivity. And Yeah, it's gonna be entertaining. Okay, Q's 45 bips. Anything else from the suits? Okay. Let's see. Let us see what the suits are saying. Bond rally, still central bank, push it back on cuts. That's fine. We have bank. Oh, no, just talking about the banks. Okay, well, it's boring. What else? Forget treasuries. Corporate bond ETFs zoom as economic confidence grows. Oh, that's interesting. Fixed income investors continue to curtail allocations to treasuries in favor of corporate bonds. Interesting. Risk on corporate ETFs. Give us some of them here. Fixed income investors embraced risk and poured another $6.5 billion into an aggregate of corporate bond ETFs. Yeah, interesting. They don't actually provide some of their favorites. That's all right. Okay, I'm waiting for that hole to lift on New York Community Bank. I want to see some entertainment here. I want to see what ends up happening. Oftentimes after a halt, when you have balance again, you end up seeing a green candlestick for a moment, but then if you end up flipping to more sales in balance again, you just plummet. So, we'll see. Nvidia down 0.25. What do you got over here? Tesla's all over the place. That's not a surprise. Amazon 6.1. Costco up again. You've got, the consumers are spending a whole lot more than has been expected, but so interesting with the lower pricing. Although $5 a month for Costco membership is kind of a steal. I will give them that. Palantir 2%. Still waiting on the New York Community Bank. Let's go take a quick peek while we wait here. What the Economist is saying today. So, as Chinese markets crash, its consumers cower. Oh, I read that yesterday on the plane. Very interesting. The Economist essentially argues that the consumer in China is substantially more likely to spend, and that they make up like 18% of global GDP, but only 13% of global consumer spending. So there's this huge disconnect between how much they make up in GDP and how much their consumers actually spend. And this last cycle of pain that they've created for consumers just again reiterates why you have to save more in China. Yep. Okay. What else? Okay. Well, waiting for that New York Community Bank to unlock. That China piece was interesting. More updates. Stay tuned for those. Oh, there we go. Community Bank unfreezes down 7% now. Down 8% now. Oh, this is pure entertainment. Down 9% now. Didn't even get a green candlestick after that halt. Not even one. Wow. They're gonna fail. Like, once the stock market says you're going to fail, you're pretty much going to fail. You need to get some kind of real buyout in here. $2.7 million bank, or $1 billion bank. Down 8.3. Oh, a little buy came in there, 7%. Anyway, so that's going to be one to watch today. Oh, there it is. Oh, it's all over the place. Anywhere between 7 to negative 9%. Huh, entertainment. Okay, Q's actually pushing down a little bit as the day's progressing, probably on yields. Bond yields, we're at... No, bond yields went negative as well. Oil's up at 79 again. Bond yield's flat now, but slightly negative. Yeah. All right. Keep an eye on this. Let's go ahead and push the button. Stay tuned. Later today, some big things are happening. Updating eHack website. Probably a house hack update. and a baby update. So you'll hear something on House Hack regarding warrants. Stay tuned. So this is a lot I got to get done today before I go back to the hospital. But anyway, here we go. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than House Hack, nor am I presently acting as a market maker. Boom. There you have it. All right, heading over to the Course Member live stream. Thank you so much for being here. I'm going to go grab another cup of coffee and we'll be live down 8.3 on New York Community Bank now. See you, folks.